All right, as promised, well, the Tax Cuts and Jobs Act going to have a big implication for the exam. I myself took the exam before. This played a role. I took the exam back in 2018 for reg, and the changes, I believe it did not start until 2019. So this Tax Cuts and Jobs Act, why am I mentioning this also? Why wouldn't I just use the new numbers, the new information? Well, because many of you may have studied tax, practice tax before this change happened. So it's going to be important to kind of go through, talk about what it was before, maybe talk about the rationale, because yeah, there's a massive chunk of you out there that are going to have practiced tax before this. It's also kind of talking about the evolution of how this all worked. It may be beneficial. I'm not talking about this for my health. I'm not talking about this because I enjoy it. I'm doing this because there may be instances in which it's helpful to tell you how it used to be, how it is now, and that's going to be for your benefit. Again, not for my own health. I'm not doing this for me. This was major tax reform legislation. It was aimed at simplifying the tax code, stimulating economic growth, and making the U.S. tax system more competitive globally. The rationale behind this was simplification. By reducing tax rates, such as the federal tax on corporations, I believe it went from 35%. Now, I know it's 21%, but what it was before, I'm not the foremost expert on that. My job here is what is the numbers going forward. It increased the standard deduction, eliminated certain deductions. The Tax Cuts and Jobs Act aimed to simplify the tax filing process. Now, this whole thing, I remember when it happened, it was very much, some people loved it, some people hated it, some people said, what is that? I don't know. For example, in high taxed states such as New York, where I was myself, I remember everyone being up in a flurry because I believe they removed a lot of benefits from paying taxes to a high taxed state. There was a lot of pros and cons all around. Was this a good thing? Was this a bad thing? In some ways, it just depends who you are, right? It depends how you benefited. Economic growth, well, by lowering tax rates for both individuals and businesses. The Tax Cuts and Jobs Act sought to encourage consumer spending, business investment, and job creation. If we think to simple economics, supply and demand, if there's a lot more supply of money in the hands of people, then they're much going to be more likely to spend it. But if a lot of money is being given to taxes, well, then you're not going to have as much money, and you're probably going to be more conservative in your spending and not go out and stimulate the economy. Also, competitiveness, by lowering the corporate tax rate and shifting to a territorial tax system. The act aimed to make the U.S. more attractive for businesses, incentivizing them to invest and operate domestically rather than moving operations and profits to lower tax jurisdictions. If any of you are aware, Ireland, for example, is a wonderful place to run your operations as a tech company. They give you massive tax benefits. And why do they do that? Well, they want the business over there. So there's a lot of issues with those companies. Tech companies, Apple, Microsoft, all these companies going over there, not paying U.S. taxes. This act, now legally, can the government say, hey, you have to come back? Well, not really. So what can they do, though? They can incentivize these companies to come back by giving them better tax rates. So that's what this intended to do. Am I an expert in this? Do I know if that really worked? I do not know. And I'm here to get you past the exam. Now, as mentioned, our job for this exam is not to discuss if this legislation or any other tax law was effective or not. There's two reasons for this. Now, opinions are not tested. Only straight facts about tax law are. I didn't write the test, right? It's straight tax law. And life is short. I'd rather be discussing literally anything besides tax law, past what we need to know for the exam. I've got a lot of things to do. Maybe go spend time with my cat or go watch a movie or something, go for a walk. My job here is to get you through what we need to see. And that is that. All right. Talking about individuals. What did this do? What did this Tax Cuts and Jobs Act do? Again, this is going to very much be helpful if you studied or practiced taxes before 2017. Also, just in general, these are the new results of what happened. So it's kind of like a soft introduction to what we will see throughout the exam. The act did introduce significant changes to the U.S. tax code for individual taxpayers, corporations, and other entity types. Specifically for individual taxpayers, it lowered tax rates and adjusted tax brackets. It nearly doubled the standard deduction. It eliminated personal exemptions. So this is a big one where you may have had dependents and you had exemptions before. So this changed the exam as well a lot. There were a lot of questions that had to be thrown out because exemptions were not a thing anymore. It limited the state and local tax deduction to $10,000. Yeah, that was a big issue. So state and local tax, if you paid a lot of state and local taxes, if you're in a state such as New York or California, sorry to pick on you. I can pick on New York. I'm from there. You have a lot of state and local taxes, so you can't take those as a deduction as much anymore. It reduced the mortgage interest deduction cap to $750,000 of acquisition debt. It suspended miscellaneous itemized deductions subject to the 2% floor. So there were other deductions you could get. It really slammed the itemized deductions, which you could say also did great to simplify it, because if a lot more people are taking the standard deduction, a lot less people are itemizing, as we will see when we dive into those lessons. The itemized deductions, those are much more complex than just simply taking the standard deduction. It increased the child tax credit and introduced a new family tax credit. So if you have kids, good for you. I don't know how much of an impact that had. It introduced the QBI deduction. So this is a new topic that we had to see. It eliminated the Affordable Care Act individual mandate penalty. This is something where once the Affordable Care Act was introduced, you were required to have health insurance. And if you didn't, well, you got penalized that. You actually got a penalty for not having health insurance. And as such, you had to go buy health insurance or get it through the market. That was eliminated. Now, there are some states that still require that. I think Massachusetts, New Jersey, there's a few other ones. So just some for your knowledge, right? We're here to benefit your own knowledge as well for your own life. And it changed the rules for alimony payments under new divorce or separation agreements. This is a big one we will see. In terms of the exam, if there are real dates ever mentioned, you know it's important. So if you see a question and it says year 1, year 2, okay, like there's no real tax law implications that were changed, right? It's just something there. But if we see, oh, we received alimony from 2019, that's a real date. So yeah, we would know that for sure this is going to apply to and reference changes that happened in the tax code through this specific act. For corporations, what did it do? It reduced the corporate tax rate to a flat 21%. This is something you should all be grateful for. It eliminated the AMT, the alternative minimum tax. Now, I mean, for the purpose of the exam, was this a good thing in real life? I have no idea. But the AMT, this was a big, complex sim that you would have likely had to prepare for and possibly not even seen it when you took the exam. So that was not fun. It allowed full expensing of qualified property for 5 years. It limited the net interest expense deduction to 30% of adjusted taxable income. It introduced new limits on net operating loss deductions, and it transitioned to a territorial tax system. We'll talk about what this is in our multi-jurisdictional tax lesson, and imposed a one-time repatriation tax on previously untaxed foreign earnings. This was, again, to bring corporations' earnings and companies' earnings back to the U.S., saying, hey, you just got to pay tax once on it, and that's that. Bring it back, start your operations here in the U.S., and we'll all be happy. For other entity types, such as S-corps, partnerships, and LLCs, it introduced the QBI deduction, allowing owners of pass-through entities to deduct up to 20% of qualified business income. It limited the net interest expense deduction to 30% of adjusted taxable income. Most of these are going to be items we will see throughout the exam. It's not like you have to memorize them or write them down now, but these will be items that we'll see. Otherwise, we wouldn't be mentioning them. It allowed for full expensing of qualified property for 5 years. It changed our NOL deduction and carry forward rules, and it modified the accounting method thresholds for small businesses. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.